What's up, everybody? It's Marco from Digital Dash. I'm going to be very quickly and directly talking about how edge plus context and conditions of the market can influence your probability of success, right? So edge plus context and conditions of the market equal probability of success in each trade and in your overall trading performance. So getting right into what I mean by that, edge plus context and conditions equal probability of success. So I think it is extremely important for me to understand moving forward that I will not hesitate to execute when my edge is present and ideal conditions and context align with my edge to produce a higher probability. So edge or entry signal for your strat, whatever you're doing that makes you money in the market, plus conditions of the market and context of the market aligned will determine your probability of the trade succeeding, right? So if you see your edges present, but the conditions of the market and the context of the market don't align, then you'll end up with a lower probability trade. But when all of these things align, you'll end up with a much higher probability for that trade to succeed, right? So the analogy that follows behind that, you wouldn't bring a wooden pencil to write on a whiteboard, even though the pencil will do the job of writing. The pencil is your edge. The whiteboard is the context and conditions. So the probability of a pencil working on a slippery whiteboard is less likely. But if we change the context and conditions to a notebook paper instead of a slippery whiteboard, a pencil has much greater odds and much greater probability of successfully writing on the notebook paper, right? So what I mean by this analogy is the pencil is our edge. If we have our edge, if we have our style of trading, we have to make sure that the context and conditions of the market allow that edge to do its job. If the context and conditions is a whiteboard and we know we have a pencil, there's a few things we can do. We can either, not apply our edge because our edge is not likely to play out in our favor. It's not likely to succeed with these conditions and contexts. Or we can go in our playbook, and find a new edge that does work with this context and condition. I'm not at a point in my trading where I have, I can just trade conditions and contexts that aren't ideal for me. I have a certain way that I trade, and that is my edge. I understand my edge. So instead of trying to, force writing on the whiteboard with a pencil or trying to find a marker, an edge that I don't have tested, a new marker that I found that I haven't tested out and trying to just write on the whiteboard because that's going to work and then finding out that it doesn't work. Instead of doing that, we just have to make sure that we're only executing our edge when the context and the conditions of the market are also in our favor to allow that edge to play out, right? So that's the biggest thing I want you guys to take away from this video. That's the biggest thing that I'm making this video for myself about, is this understanding right here. So going into the trade breakdown a little bit, I do want to give you guys some more information on how we were able to understand that everything was coming together, how we're able to identify that the conditions and identify the context of the market to create our plan and to have it align with our trading plan. So one of the things I noticed was, I said, LOL, nice consolidation yesterday. I said, we have to be careful and identify our ranges because we identified that consolidation for me. I said, we're not trying to sell below support or buy at a resistance until the range actually breaks. We'll need to start using daily candlestick analysis to sense the direction for the following day. I said, for now, it's obvious that 43.73 area is holding and buyers are willing to hold it at that area. What I did want to see that zone at 43.70 hold as well, because if they were willing to hold it up here where price is at now, then they should have no problem holding price above this zone. So that's what I wanted to see. And if we saw that break, then we're going to look to get involved short, right? I said Monday we failed to break and close through Friday's wick. This was the Friday candle. I said I spotted that we failed to push and close through that candle. So it was technically like an inside candle day, even though we weren't inside the body of the candle. This could still lead to ranging conditions, so we have to be careful. That's what we ended up seeing Monday. So yeah, that's what we were looking at. We understood that today could be a day where a chop happens, or it could be a day where we have to look to take buys at yesterday's lows and look to sell at yesterday's highs. So that's how we were able to identify conditions. When it came to the entry, I said I entered basically blindly as price pushed into the lows and pushed into the zone. I put my stop below the zone, but I only did this because I identified that the buying was so strong and conditions changed and looked clear. So there shouldn't be any wicking or any trickery at the zone, right? We identified that conditions changed. And I wish I could pull it up in Discord, but I can't pull it up for you guys right now. But we identified that conditions changed and the buying was starting to look much better than the selling on the way down. So last week, this is something that we did identify. So that was the reason why I was able to enter blindly at the zone, enter aggressively, enter limit at the zone, because, I wasn't expecting to see the zones get ran. I wasn't expecting to see the zones wick anymore. Because that buying was so strong all of last week, it showed us that conditions were changing. Right? So again, using that context and using that story of the market from last week to make our trading decisions from this week. We knew that after such a strong run up, if we didn't tear through the supply above, then we could end up consolidating around those levels, especially with these levels being such key levels. This allowed us to be able to spot when conditions were changing. So in 11.3, I said, for sure, looking out for that consolidation around highs if we end up creating another range next week before the next leg up. I don't want to get chopped up in the BS on lower time frames. So 11.03, I said, be sure to look out for that consolidation around highs, right? Yesterday was 11.6. That's when we said, okay, here's the consolidation. So 2 days before the consolidation happened, we knew coming into these highs, we could see consolidation, right? So again, bringing all those pieces together, bringing the entire story together. So that's what allowed us to spot that the conditions were changing. Again, 11.03, there's the message from yesterday, 11.6. So then I went on to say, as the trade developed, once I was already in the trade and I had to adjust my target, I said I moved my target from the trade I entered yesterday. I had my target as supply, but I looked at my notes and I saw that I said, we are going to transition to consolidation rules. This means that I can't have my target too far past the highs, because in consolidating conditions, the highs get sold and the lows get bought. So although we are seeing bullish activity all from last week, that doesn't necessarily matter, because now within the last 2 days, right? If we look back within the last 2 days, we are seeing those consolidating conditions set up. So all that bullish activity that we saw last week does not matter now, because the last 2 days we have been presented with a consolidating environment. This is an example of identifying that I have to move and be fluid with the market's conditions. By the time we realized that the longs were evident, now the market is trying to do something else, which is consolidate. Don't ignore the signs of it trying to do something else, which is consolidate. I adjusted my trade not out of fear, but based on the context and reading the market and still being aligned with my trading plan. My new target, even though I moved my target, was still at least a 2-to-1 trade, which still satisfies the requirement to put on a trade in my trading plan. So I didn't make adjustments based on emotion. I didn't make adjustments based on fear. I made adjustments based on what the market was telling me and not ignoring the possibilities of what the market could be telling me. So I was able to make these adjustments to trade with confidence and without second guessing, because all of my adjustments and decisions were made by rules within my trading plan. And this allowed me to relax and accept the decisions and accept the outcome. Right? So I wasn't like, oh man, am I giving back some points by not having my target here? Or, oh man, am I breaking my rules and letting emotions make the decisions to move my target? That was gone, because I understood I'm still just, I'm just listening to the market. I'm not listening to a voice inside of my head. I'm not listening to an emotion. I'm just listening to what the market is telling me. And then here, I did want to celebrate a little bit. My TP smacked, right? But again, it's not about the money. It was about the fact that we thoroughly executed our plan. We planned for this trade and we executed it. Even coming off those losses, even coming up, having our confidence hit, we were able to stick to a plan and execute. And it felt really, really good to get that winning trade back, after so many losers. I also took a note that I noticed 6 points worth of drawdown is very common before my trades turn into winners, especially with these trades that have larger targets. So that should be something I take into account. Maybe my stop losses should be no smaller than at least 6 points. Those tighter stop losses could be making me take unnecessary losses that could be winners. So that was something I wanted to note as well, but that's not really what this video is about. So my stop losses should be created with that in mind. Again, I said I ended up catching 21 points, which is a huge play despite only having one contract. I have to acknowledge that 20 points is a great move in the market to catch. We did have to hold through multiple swings for that target to be met, since it was a bigger target to day trade, but don't minimize it because I didn't have full size. That was a great move. That was a huge move. So if I was full size, I would have been able to make a full-time job's worth of pay. So stick to the process. The potential for profit is there. I'm not worried about the money, but I have to remind myself, as long as you stick to the process and continue to do this, the potential for a full-time job's worth of the profit potential is there, right? So I did a very good job at using the full context and story of the market to make logical decisions within my plan. I identified changing conditions and current conditions to bring this full trade together. I will admit my confidence and my conviction was hit coming off a loser, but I was able to identify my edge was present and the conditions that give my edge higher probabilities for success were present. So that is the biggest key. Not only was my edge present, but the conditions that helped my edge play out were also present. So that's the reason why we're able to pull the trigger and let this trade do what it was supposed to do. So just to wrap everything else up, again, this is very important. I want to make sure I have a thorough understanding of this. Edge plus context and conditions equal probability of success. So just because my edge is present, it could be choppy conditions and I could see a great supply and demand setup and I could see a great entry. Just because the edge is present does not mean that the context and the conditions of the market are going to allow that to play out. So that's just something I had to make a video about. Again, I had to break down the winning trades just the same way I break down the losing trades so that we can thoroughly understand what is it that I'm doing right in my trading, what is it that's bringing me success, and what is it that I have to continue to practice and continue to feed, what good habits do I have to continue to feed to replicate the success over time. So if you guys found anything about this video helpful, make sure you leave a like, go drop a comment, let me guys know about your experience trading the markets today, and hit that subscribe button and the bell icon so you guys don't miss another video, and I'll catch you in the next one.